Hi, I am Professor Milligan. Welcome to my weekly series, Wall Street Wednesdays. I record this series live every Wednesday from 1 to 2 p.m. Pacific Standard Time on my Instagram account at Professor Milligan. Welcome to join me there or listen to the recording here. Enjoy. Thanks. Welcome to Wall Street Wednesday. Got a couple of earnings plays that are due to report earnings today on the close. So I'm also watching those. By the way, the reason why I keep looking down is I have two monitors and my iPad going all at the same time. I have all this information just so that I can be prepared for you guys if you start asking me questions or things about the market or what's going on. So that's what I'm doing right now. I'm just going to chat briefly because Hi had texted me today, DM'd me, asking me about Eastman Kodak. So I'm not sure who saw that, but Eastman Kodak, I went and checked it out. Eastman Kodak basically had a gap opening, and when it did open, it traded something like, I think Hi, you told me 20 million shares. I did look at it, 20 million shares, and then the stock popped. So what's going on is this. Kodak, from what I saw in the news, Kodak has something going on with the drug side, and I guess they're having to do something with the coronavirus or the COVID-19. I'm not sure exactly. What I do know, to answer your question, Hi, is this. Is that when you see a stock open up on 20 million shares like that with no news, you can rest assured it's institutions crossing stock. 20 million shares, that's not mom and pop. That's not you and me. That's the institutions crossing stock. So those institutions crossed that stock this morning before the market opened. And I'm going to reach out here and guess that maybe there was some news or somehow and some institutional investors got it. So that's what happened with Eastman Kodak. Or Kodak. Yeah, Eastman Kodak. So it is back. It's doing something with the pharmaceutical industry, and that's what the news was all about. I got two questions. So one of the questions I got, I answered one of the questions. I got that from Hi about Eastman Kodak. The other question I got was concerning earnings play. So this particular investor, I didn't see him on here. Hopefully he's on, but if not, he'll get the recording. This particular investor was in a stock reported earnings. It missed the number, and the stock basically came in, what was that? Almost a 20-25% move to the downside. So the question was, should I hold the stock? Should I sell it? What should I do? Let me explain this to you guys. I can't answer that general question. The first question that has to come to your mind is, foremost, what was your goal behind the stock? If you were a long-term holder and they missed the number, you might want to stay in the stock. I don't know. If you're a short-term trader, most likely you're out of the stock. So first and foremost, you got to figure out who you are. Are you short-term trading this? Or are you a long-term investor, long-term holder? Now, in this particular case, the other thing to do is you must go find out why the company missed the number. What happened? Now, if it was a one-time unique situation, one of their major suppliers got hit by the coronavirus, but they should be back online, that's a short-term temporary situation. Now, if the other thing is that they come out and say, well, the business has changed, this is going on, that's going on, we're seeing some major fundamental changes in the business, again, then you know that this is not a short-term temporary sell-off, that this could actually go on for a lot longer. So one of the things which I always say to you guys is, I keep saying it, you must look at the transcript. You must look at the press releases on the companies that you invest in. If they beat the number, you still want to know why they beat the number. So again, why did the company miss or why did the company make the number? You got to find the whys. If you find out why the company missed, then you got to decide if that's a short-term situation or long-term. Now, if you're short-term trading and they miss, just close out your position and go. Move on to the next one. If you're long-term in that stock and they miss, you got to find out why. And if things don't look as good as you thought or as well, then it's time to jump out and go. Another thing that I do is I'll look at the company's history in terms of, have they beaten the number in the past? Have they missed the number? Have they beaten the number? How often do they beat the number? Then after I look at if they beat the number, the next question is, if they beat the number, what kind of move are we getting in the stock? And what kind of follow-through happens over the next 2, 3, 4 weeks? One of the things I'm going to say to you, and Doesn't mean, again, back up. There's 1,000 ways to make money in the market. So my way is not the only way. It's what worked for me. I'm sharing with you, but does not mean it's the only way. Now, the reason why I say that is this. When I look at earnings plays and I decide to get involved in earnings plays, one of the first things I look at is I look at the company's chart. I look to see if the company's trading near its all-time high or if it's trading near its low. I look for a combination of both fundamentals and technicals. So there's been a number of stocks that have beat the number this quarter that are beating the number, but there's no follow through, or they beat the number and the stock runs a little bit, then it hits resistance from stock that's been hanging over its head for the last couple of years or a couple of weeks or a couple of months. So one of the things I do is I typically like looking at stocks for earnings plays that are at or near their all-time high. Reason being is this: if they beat the number and the stock starts to run, there is no resistance. We'll get a nice run on it. The next thing is, if the stock is in a long-term upward trend and been doing extremely well, then my thought process on this is that after the number's out and the market digests and the stock does its backing and filling and so forth, once it gets all the fast money out the way, my belief, which has happened in the past, is the stock's going to continue its upward movement. The earnings are just confirming what Wall Street thinks, and that is that the company is doing extremely well and outperforming. Now, when a company beats the number and they report, they're going to do, their analysts, you and I, are going to take that number and go back and reevaluate what we think the price of the stock should be or what the stock or company's worth. So understand this. Company beats the number. Wall Street says it's going to continue. Wall Street then will come out with a report and says, we've raised our target price. We've raised the target price. We think the stock's going to be such and such in the next 2-3 months. That's what you're looking for. Those are the ones, if you have the cash to stay, you stay with it. Again, think about it. Think about the companies think about the great performing companies. Right now we have FANG right now. Facebook, who's on here? Facebook, Amazon, Google, and why am I forgetting? Apple. All right, they're up here talking about what they do and they're being interrogated, they're being questioned. But my only point in saying this to you is those companies have been beating the number for several years. They've been beating the number for several years. And what that means is that every time they beat the number, the company's doing better than expected. And what happens? Wall Street comes back, the analysts come back and say, we've raised the number, company's doing better than expected, and therefore we want to keep going. Now, the other thing I like too is I like smaller companies. And I don't mean micro caps, I don't mean small caps. I mean, when I say small, I like companies that trade less volume in general. In general. Now, it doesn't mean, and when I mean less volume, I got to be careful. I'm not talking about 100,000 shares. I'm talking about, if a company trades 10 million shares a day, it's going to take a lot to move it. So a lot of times I'll see a bigger kick, a bigger move in stocks that trade 3, 4, 500,000 shares, 600,000 shares on average a day. Does not mean I won't look at the stocks that trade more volume. In fact, one of the stocks I'm looking at right now traded 10 million shares today ahead of the number, and they usually trade on average about 8 million shares. So I'm excited to look at that. And again, I'm keep looking for the numbers. That's where we're at with that. That's what's going on with my earnings play. If you have any questions right now, I'm always open for questions. Hit me up with questions. I'm watching this as I'm watching and looking, see if you guys are typing any questions. Feel free to ask me questions. Now, the other thing, all right, Qualcomm reported. All right. The other thing I want to talk about, I'm trying to get my dates right. But anyway, we talked about secondary public offerings. I made a distinction that there's two types. There's the one that's basically done the day of, which is a shelf registration, which is a S3 form with the SEC. And then you have the other secondary public offerings, which are not shelves. They're announced. It might take them 2-3 days, 2-3 weeks to bring it to the marketplace. Now, the reason why I mention those is on a shelf deal, that means that they done all the paperwork, they can do the secondary offering in the stock, but they have up to 2 years to actually do it. And on the shelf, when they do it, they literally just drop it on the market that day, that night. All right, let me say it again. They're literally just going to drop it on the market. And when they drop it on the market, it's going to basically make the price of the stock drop. The other one, the one that we can make money on both of them, don't get me wrong. But the other one that we love is the S1, which is the one where they file the offering, the secondary offering, and then it's 2-3 days, maybe even longer before they bring it to the marketplace. Now there's a company, and I got to get the name right. You know, I'm a symbol guy. I'm not a name guy. So let me get this. Let me see if I can get this name. The name of this company is Xentalis Pharmaceuticals. IPO'd about 3 months ago, maybe less. They're coming to market to raise money. Now, here's what's interesting about this. When they announced that they were going to do a secondary, the stock was trading at $40 a share. That day, or the next day after it was announced, the stock traded down as low as 35, and right now it's hanging out at 36. That deal's probably going to be priced at 36, maybe even 35. It's going to be priced at a discount, pretty close to where it is. Based upon that, I would expect this stock to run tomorrow. If the market holds up, I expect it to run at to digest this stock. So I'll be looking to trade this. I did not trade it ahead. I missed it. Life happens. I missed that train, but there's another one coming. But at the same time is, if this thing is priced, and it'll be priced sometime tonight, it'll be priced, it should trade higher again. Now, if it breaks 36 on the secondary offering, or it breaks the offering price on the secondary offering, don't stay with it, get short. If it's below the offering price and breaks through the offering price in the secondary, get long. Now, I have some questions here. Let me see. What do I think about high dividend paying stocks? You know, first and foremost, a lot depends on you as an investor. If you are looking for income that can grow and can increase, you're looking for common stocks that pay a dividend, have a history of paying dividends, and the dividend should increase. Now, there's two things that really you got to be careful of with high dividends. First and foremost, if the dividend payout's constant, but in other words, your dividend, the amount they're paying out is pretty constant, they keep increasing it each year, but the price of the stock drops, it's going to drive up your dividend yield. So that's why I say be careful of buying high dividend paying stocks just because they have a high yield if the price of the stock is falling and they keep consistent with that dividend. The other thing to worry about too is look at the business industry they're in to make sure that the company can maintain that dividend. If you're a growth investor, you're not really looking at dividends. So I'm going to assume that you're looking for the income. I would say I would look for companies that have a history of increasing that dividend. I'd look for companies that have a consistent dividend. And I'd also look for companies that I'd have to go through and make sure that I'm looking at the industry that they're in, and that industry should or could or will hold up. That's what I'm looking for. All right, hopefully I got that question for you. Now I got a question here concerning silver, the metals. Hey Christian, how are you? Let's see, silver, metals, thoughts involved. All right, so here's the deal. Those who've been around me know that I don't buy companies that trade commodities. I don't buy a silver mining company. I don't buy a gold mining company. If I'm going to play the metals, I'm going to play the futures. All right, I'm going right into the commodity. I'm going to either go long or short, a futures contract or options on the futures contract. I want the pure play. The only reason why I bring that up is just because someone's involved in a company's in that industry and gold is going to an all-time new high price and so is silver does not mean that they're making money. Understand there's a business there, there's a company. So I'm going to trade the actual underlying commodity, which is a pure play on that. Now, with that said, here's the situation. When there's fear in the marketplace, flight to gold. When you're worried about a recession, is a flight to gold. Now, the other thing about gold is, and don't get me wrong, I'm not slamming gold. I've traded it before. I'm not a big fan of it. Traded silver more than I've traded gold. Traded high grade copper more than I've traded gold. All right, so here's what's going on with the metals. Fear of a recession, fear of a weak dollar, all of these are leading to investors moving in towards gold. That's the fundamental side. The other side that's happening with gold now is you have momentum players. There's a lot of momentum. There's more momentum players in this market than I've ever seen in any market. And what I mean by that is they see something going up and they just buy it and they ride it till it stops going up. We're seeing a lot of that. And a lot of that comes from I guess a younger, I shouldn't say younger, a newer investment group that's in the market that really doesn't understand and hasn't figured out the market yet. So because of that, they're driving up. They literally are driving up the price of not only gold, but other assets. They're driving up because they're just buying it. I'm not saying we're in a bubble, but it's the same type of mentality as a bubble. And what that means is, what I mean by a bubble is that they're not looking at fundamentals. They don't care. All they know is I can buy it at $10 and later today or tomorrow I can sell it for $12. I can buy it at 12 and later today I can sell it for 14. I buy it at 14, I can sell it again at 15 or 16. That's a momentum trader. And they're not looking at the underlying fundamentals about gold or what's going on with the economies. All they know is prices going higher. Now, with that said, my indicators for commodities literally gave me a short on high grade copper. And it also, it's hanging around there. It hasn't gone fully bearish on gold or silver yet, but it's close to it. So what I mean by that is, this is something that when it breaks its 10-day moving average, I'm watching. So when if it breaks its 10-day moving average, for me, I'm probably going to try and get short these things. I think they're overextended. The challenge we all have is, I'm probably right. We're all probably right that it's overextended, but that does not mean it's going to pull back today. The thing that we have to worry about is timing. And the one thing that I'll explain to you guys is this: if you just short a security and your timing's off and that security continues to run, you're going to get a short squeeze and start losing some money, a lot of money. The best thing to do is to wait, see it try and break that 10-day moving average, and then go for it. Once the selling pressure does hit, gold's going to come off really fast, and it's going to come off hard. But again, I don't know when. So hopefully, Christian, I answer your question. And again, I just don't trade the gold stocks. I used to trade them when I first got into the business. And I literally, just like a lot of you guys do, I see gold at the time was setting new highs. So I'm like, let me go buy some gold stocks. And gold kept running and those stocks just did horrible. And as I started digging into it and learning more, because I was young, I had just got into the business, I was young. As I started to learn more, I started to learn and realize that these are companies. And a lot of gold companies at the time I was buying were over levered. They had too much debt, too much leverage. They just weren't making money. Even with gold at the all-time high, at that time, was at the high price. So that's the reason why I'm not a big fan of the gold stocks. Same thing with oil stocks in general. I'm just not a big fan of oil stocks. Not been in those two. So I talked about Xentalis. Has anybody reported? Has any of my companies reported? All right. So for those of you who watched my video, I put out a video this Sunday. I put it out. What I did was, as usual, I came down to my office on Sunday. I pulled up. I had been looking at some stocks. I pulled up a whole bunch of charts and some other things, and I literally started going through, as I call it, being the detective, looking for my next trade. I spend more time looking for trades than I actually spend trading. The actual trading itself happens in seconds. You buy it, it takes a second. Now, then you have to sit back and have the patience to watch and let it develop and what you think is going to happen, and then sell it, take your profits and let it run. But you basically all your work is done looking for that security. And what's interesting is, which I mentioned to you guys, I've got maybe 3 or 4 on all my strategies. I got about 3 or 4 little signals I look for, and when I get those 3 or 4 signals, I go for it. When I was going through that video, one of the things I did was I was looking at Microsoft. And here's what's interesting with Microsoft. Microsoft beat the number, and they basically put down that a lot of that came from their web services and what they do. So immediately I went in and I looked and said, all right, who's it also in this? Who are their peers? Who else is doing what they're doing in that particular arena? And I found 3 or 4 companies. The one I found actually is best of breed. And what I mean by best of breed, I'm not saying it's a better company than Microsoft, a better product. What I'm saying is that the company is growing faster than Microsoft, and the stock is appreciating higher than Microsoft. That's what I mean by that. It's a younger company. And I want you to think about this. With a younger company that doesn't have the size of Microsoft, it doesn't take a lot to move that ship. It takes a lot to move Microsoft. It does not take a lot to move it. And the company is ServiceNow. I don't know if they're reported. I'm going to go take a look again. As I said, in the stock. So let me see. I'm in the stock right now, and I have no idea if they're reported. And I still don't know if they're reported. ServiceNow. I have no idea what they've done. So I guess they missed the number. So the stock was up 10 points today. The stock now, late trading, is down 19 points. So you have people taking profits. I have to read into the number. The good news for me is I'm always hedged. And I'm not going to read it now, but I'll look into the number. But that's again what we look for. And the stock ran up ahead of the number. Good looking chart. So one of the things I also say about companies reporting earnings is this a stock I'd want to own if everything's fine, but the stock does not rally? Is this a stock I want to be long? And the answer is yes. So that was ServiceNow. So they did report. The other one that reports today on the close was PayPal. I'm not sure what they did, so let's go take a look at PayPal. All right, so here it is. PayPal was up 8 points today, up another 5 off of the earnings. I'm not sure if they beat the number, what the number was, but they are up after market trading. What's interesting about PayPal, and this is what I was telling you guys about earlier, 2 things happened with PayPal. One, ahead of the earnings, they traded 10 million shares, a little over 10 million. Average daily volume is 8 million. The second thing I found on PayPal was PayPal had a lot of activity in some of its options. One of the things that in terms of looking at buying and selling, do not forget options. There are a lot of investors that won't buy the stock, but they'll trade the options. And one thing about options and stocks and everything else, the market reports all transactions. We can go find and go see what the option activity was each and every day. And there was unusual option activity in PayPal. So that's one thing I look at. Now, the other thing too is, and I hesitate giving you guys stocks only because, ahead of the number, only because if it doesn't work, I don't want you losing money. I want you to make your own decisions. But there's another company coming out with earnings that I expect to beat earnings. Stocks trading at all-time high. It's running ahead of the number. So I'll take a look at that one too. In fact, I discussed it on my YouTube channel, Professor Milligan. So again, I post stuff up there. I post up there things that I can't post here. Again, those are videos. So make sure you check those out. Now, do I have any other questions? Anybody else? What's going on? You guys need some help with anything? You making money? If you have a question, let me help you. Let's see if we can figure this out together. I have no problem sharing my strategies with you. My goal is for all you guys to make money. All right. So I don't see any questions there. So let me continue what I was talking about. So another company. So again, I looked at this one too. So again, stock is at an all-time high. Numbers are due out tomorrow on the close. Company's doing extremely well, and they're in the same industry. What made me look for them is I went and looked at Chipotle beat the number. They said things are going really well, so forth and so on. So what I did was I looked at some major competitors, and I found 2. Who was it? Wingstop also, I think, beat the number already. But there's another company out there I looked at in that same industry, same restaurant. Believe it or not, it's a restaurant, but it's a national chain. Stock is doing extremely well. Company's doing well. So I looked at that in terms of it beating the number. So we'll see. Somebody was asking me about options. Let's see. Why do people get excited about options? Options is leverage. The reason why people get excited about options, and you guys know, options is leverage. What I mean by leverage, you can spend a couple $100 in your control of an asset that's worth $10, $20, $30, $40, $50,000. All right, you can do that with options. And what that means too is that you can get those same returns. Now the downside to options is if it does not work and time goes against you, you can lose all your money, as most of you guys know. I highly recommend that you don't start trading options until you start learning how to trade stocks. And what do I mean by that? If you have a hard time picking out winners, stocks that make money, if you have a hard time finding stocks that are going to go up and stocks that are going to go down, options are not going to help you. Options is not a strategy. Options is just another vehicle. Options just give you more leverage than what the stock's going to give you. So if a stock goes up 10% and you're levered on options, that 10% move in the stock could literally double your money in the option, as some of you guys know, or close to it. So again, a lot goes into options. I know a lot of guys like to trade options. I trade options. I use them as a hedging technique also. Now, let's see. The question is does Intel look oversold? I'm going to go look at Intel right now. Is Intel oversold? Whoa. Yeah, it got hammered. It got hammered off the number. And what's interesting is AMD has had tremendous advanced micro device. I'm sorry, AMD's advanced micro device. They were a competitor of Intel. They've basically have moved. I shouldn't say they still are competitors, but they've moved. The way AMD used to work was Intel would come out with a new chip. AMD would basically look at that chip and make a cheaper version of it. So that's why the two were very closely connected. But now they're not. So Intel. Let me go to I'm looking at this chart and it's not pretty. You got a gap in here between what, 60 and $51, $52 a share. Let me go to a shorter chart. Yeah, you got a gap in here. So let me say this. If you are a long-term investor, you can buy Intel. All right, Intel's not going away. Now, I'm not saying Intel's is going to be the top performing semiconductor company. I'm just saying that you can buy Intel here. If you're a short-term trader, I wouldn't buy Intel here. Intel's got work to go back and fill that gap. All right, it's going to need a lot of positive news and information in the market to fill that gap. A lot of work. And then once it fills that gap, it's going to take a lot more work to get back up through that gap. So I would not be a big player in Intel. If you're long Intel, I understand. There are other companies in the group that are doing much better. And in fact, the top performing stock in the group right now, as you know, is NVIDIA. And if any of you guys have played video games, which I know most of you have, NVIDIA has the best chip for that, and that's what they do, and they pretty much dominate that market. There are better plays in there. I haven't looked at NVIDIA's chart recently, but there are better plays. I would just, without going too much further, I'm going to look right now. Got to look at where NVIDIA's at, but I would choose NVIDIA over Intel. Let's see what else. Let me see. Hold on a second. I'm just looking at this NVIDIA chart. Yeah, there's no question in my mind which one I play. And I'm looking at the earnings. The earnings are due out August 13th. There's no question between the two. I'd be playing NVIDIA over Intel. One of the things I'm going to say to you guys is be careful. Be careful. How can I put this? Be careful trading stocks because of their names. Now, I know Intel's a big name. It's a real popular company. It's been around. It's been a Dow stock for years. It's been one of the most powerful companies in the world. So don't get me wrong. I don't think it's going out of business overnight. But that just because that's what they have done in the past does not mean that's what they're going to do in the future. In fact, Intel has gotten into problems with their chips for mobile devices and other things which they're trying to move into. They're not doing as well as they have done in the past. I haven't gone through the financial numbers because I just have no interest in Intel in that respect. Questions about going back to school and going back to school stocks. I hadn't thought about it. You're going to laugh. The one thing I had thought about was typically in the summer months, especially right around now, you start seeing some of these companies take off because you're seeing back to school buying by parents. And I'm not sure we're going to see back to school buying by parents this year. So I'm not sure what to do with these. I'd have to go take a look at them in terms of, because someone's asked me, would I be shorting some of these back to school stocks, some bus companies. I'll take a look at it. It makes sense, Christian. So I would say that the next thing to do is I'll take a look at it, and I'm writing it down right now. PLC, PLCE, and BLBD. I'll take a look at them. Give you my 2 cents. That's about all I can give you, 2 cents. Oh, I missed this one. What do I think about my opinion on ETFs? My opinion on ETFs is this. Well, before I give you my opinion on ETF, let me say this to you. First and foremost, I need to know what kind of investor you are. Are you long-term? Are you short-term? Are you aggressive? How can I put this? I've traded ETFs. I've traded the SPY, to be exact. The SPY and the Qs. I traded them short-term. I've traded them short-term. I have a strategy that some of my students know I've talked about, my VIX strategy. And the VIX strategy is based on the S&P and the VIX, which is a, how can I put this, contrarian indicator. So and you guys all know about the VIX. I talk about the VIX all the time. So I've been using the VIX now for over 15 years. I trade the VIX, and I use the Qs to do it. So here's my thought on ETFs. One is, I just said I use the Qs. The Qs is the NASDAQ 100. I apologize. So I trade the NASDAQ 100 ETF, and I also trade the S&P 500, which is the SPY ETF. So I do trade those. Overall, though, I'm not a big fan of ETFs or mutual funds. That doesn't mean that they don't have a place. I'm not saying that. I own a mutual fund in my retirement account. What I'm saying to you is this. If I'm actively involved in the market, which means I'm an active investor, not passive, I'm not trading ETFs. But if I'm long-term and I'm passive, and what I mean by passive, that's not an insult. Passive means if I'm not actively going out there looking for stocks to buy and doing fundamental research and technical analysis, if I'm not doing any of that, and I'm a long-term investor, yeah, I'd buy a SPY ETF. I'd buy the market. I would. If you're a short-term trader, I do that too. Now, if you're an active investor long-term, I wouldn't buy this ETF. I probably would buy some of the ETF for some of my portfolio, but like I said, I'm more of an individual stock buyer. So I have nothing against ETFs, but again, if I was buying them, and you gotta be careful with these ETFs. They're coming out the woodworks for ETFs. They have ETFs now that are marginal. They have ETFs that play short. They have ETFs now that, sector ETFs, industry ETFs. There's a whole bunch of ETFs out there like mutual funds. You got to make sure you pick the one that fits your goal, your needs and your goals long term. And believe it or not, the reason why I always say the S&P 500 for the ETF, most portfolio managers don't outperform the market. They don't outperform the S&P 500. And believe it or not, a lot of these funds are charging you fees and management fees and commissions to buy these funds, and they're not outperforming the benchmark that you can actually invest in. You can actually invest in the benchmark they're benchmarked against. So, and what I'm saying to you is, buy the benchmark. I'm not trying to be funny. If anyone's been in my class knows this. We talk about it. You studied it in the books. Most mutual funds don't outperform the S&P 500. They just don't. And there's a number of reasons why. Fees, commissions. I'm not even talking about the portfolio manager making some bad trades or investments. I'm just talking about the fees and the structure. The commissions is one of the things that puts them behind the S&P index. The S&P index doesn't charge a commission. If you buy you should be buying a no load S&P 500 mutual fund or ETF. But the other side of the coin is they're not actively traded. The ETFs, the S&P 500. And most investors don't outperform it. So it's a much easier trade, especially if you're not going to sit there and watch it and put hands on. The other thing I'm going to add to this, and this came up in my conversation with another person yesterday, or day before yesterday, and that is, if you're long-term, you're going to buy the SPY, the ETF, put yourself on a payment investment plan. What I mean by that is, if you're going to say, I'm going to take $100 every month, then take $100 every month and keep buying that S&P 500 ETF. If you're going to do 500 or 1,000, whatever it is that you can do every month, just keep doing it every month. Pay yourself first. You're going to be surprised after several years how much money you saved and how much growth you had in that fund. And of course, my recommendation is you do it for a lot longer than just 5 years. But again, if you're, I know right now a lot of you guys have time to watch the market, but as we come out of this pandemic, you're going to have more and more, you're going to be spending more and more time at your job and less time online. And you're going to have less time to actually follow the market. And if that's the case and you don't have time to follow it, I'm highly recommend that you just basically use the S&P 500 SPY ETF and just keep making your investments in there. That's my recommendation, long term. All right. And as I had told you, I had one of my students, he was between jobs, he might even be on the call. Caleb, you here? If you are, say hello. Took $5,000 and turned it into $50,000 in less than a year. And then from there, he went back to work, and he said to me, he said, Professor, I'm back at work, so I don't have time now to actually follow and trade the market like I was. He said, but because I'm back to work. And I understood that. And that's what's going to happen to some of you guys. Let's see, one of my students, do I cover this in my Finance 342? The answer is yes and no. I cannot give you specific strategies in my classes. I can talk about the market. I'll educate you on how the mechanics work and everything else. But strategy-wise, we just don't have time in the semester to cover all the strategies. And by the way, guys, you should be using my stuff to develop strategies. You should develop your own strategies. There's nothing more empowering than to be able to sit down in front of this machine, turn it on, and go make your money. Let me say it again. There's nothing more powering than your ability to turn on this machine, sit in front of it, look at it, and over time, put money in your pocket. So that's what this is all about. One of the things that I was taught is that you don't want lazy money. You work hard for your money, and then when you get it, you want your money to work hard for you. Money working hard for you is not money sitting in a bank account, sitting in a savings account. That's not work. Or sitting in a mattress or wherever you park it because you're afraid of losing it. Money has to go to work. And if it's not in the stock market, then go buy a business. Go buy some asset. Go buy something of value. Believe it or not, and this is one of the things I talk about at the university and with my students, cash gives you the worst return of all assets. The worst assets in terms of return is cash. All right, now I'm looking at my time, and one thing I've learned from this is I cannot go over. If I go over Instagram's going to kick me out, and I won't get the recording. So that's what's going on. So I just got to keep an eye on my time. Any other questions? I think I've covered everything I had to cover. Oh, I did forget something. I'm going to it right now. I'm on my iPad. Bear with me 1 second. My commodities. Commodities that I like fundamentally. Now, it's interesting because we were talking about gold, and one of the reasons why gold is up is because there's been weakness in the dollar. I've got a fundamental buy on the dollar. Now, I'm going to repeat this for you, make sure everyone understands. Fundamental buy, I buy based on fundamentals and technicals. So fundamental buy is only halfway there. The dollar has been going down as it has weakness. I believe there's going to be a reversal and the dollar is going to strengthen. The challenge is you and I don't know when. So again, fundamentally it's a buy. It's down. It's weak. There's weakness in it. I would be patient and wait. And if the stock starts to go up and run through its 10-day stock, if the dollar starts to go up and start to run through its 10-day moving average, then I would get involved. I got to make sure you guys understand this, and I got to keep checking my time. I am not a short-term trader when it comes to commodities. If you're a short-term momentum trader, then stay short the dollar because it's probably going to go down a little further. I'm looking for a reversal, all right? And my strategy can take 2-3 months sometimes, but I'm looking for a reversal. What I mean by reversal, I'm looking for the dollar to actually stop going down, go flat, consolidate, and turn and start to go up. That's what I'm looking for on the fundamental side. The dollar is way undervalued. As I said to you though, the market, the traders, the investors in the market right now are more comfortable shorting the stock, and they're momentum traders. And what I mean by momentum, they're going to short a stock. If it goes down more, if it goes down, they're going to short some more. If it goes down again, they're going to short some more. They're going to keep shorting it until they reach a point where it stops going down. Then they're going to it stops going down. Then they're going to start to cover their shorts. And as they cover their shorts, they're going to, then the stocks, or the commodity starts to run. They're going to start to cover their shorts. And at some point, they might even go from being short to closing out their short position, covering, and then going long. That's my only long recommendation. Now on the short side, I've got 3 currencies on the short side. The Swiss franc and the euro. Both have been running. They're in an upward trend. If you're a momentum trader, go for it. Again, I know I'm redundant, but I'm looking for a change in momentum. I'm looking for a trend change. Then besides the currencies I named, also short cotton, also short lumber, also short high-grade copper. Those are the ones. I do have another question. Check my time. I got a couple of minutes here. I'm not a student, but do you cover technical analysis strategies? I do cover technical analysis strategies. It's one of the things that I'll put a video on that up on my YouTube channel. And the reason why is because, I can talk about technical analysis and what I do and how I use it, but it's always better that when I talk about it, you can see it. Now, some of the stocks some of the videos I currently have posted have some technical analysis conversation in there. So make sure you check on those. What do I think about Kodak? Here's what I think about Kodak. Kodak ran because of something that's going on in the pharmaceutical industry with the drugs, with the COVID-19. And as I've told you guys a number of times, the reason why I don't like biotech pharmaceuticals is they're driven on news. Did they pass FDA approval? Did they get FDA approval? Where are they at? Is this going to work? Is that not going to work? And that news comes out randomly. And so I just have a hard time with that. And the other thing I have a hard time with is you look at Eastman Kodak stock, it went sideways. It was down there at a penny, less than $1, excuse me. And then from there it ran. It ran today. So what happened to make it run today? I don't know, but I'm just not into news event driven stocks because I'm smiling because a lot of the things I'm telling you, it's not because of something I heard or saw. It's because I actually tried to trade biotech pharmaceuticals. All right. So a lot of things I'm telling you guys about is not because of something I saw. It's because of something I experienced or something that happened to me. And when it came to trading these biotechs, what happened to me was I'm in the stock. The news didn't come out that I was looking for. It came out in the wrong direction. So I'm like, oh my goodness. And the stock just went down. And the other thing that makes me real nervous about especially the startup biotechs, is that most of them have no revenue because they have no drugs already in the marketplace. There's no revenue coming in. So you want to talk about speculation? That's speculation as far as I'm concerned. That these scientists are going to come up with this drug that's going to work, but they have no other drugs yet. They have no revenue. So you're investing in a business that generates no revenue that you hope at some point they're going to get this drug passed, and then their projections are correct that there's a market for the drug. They're going to make so much money off the drug, and then they can take that and that money, that revenue they make off the drugs, and be transmitted into the stock price. I've been caught so many times when I was younger. And the thing that made it worse was I got caught in those when I could have been in other securities making money. What do I think about possible reversal of natural gas heading into the winter? Yeah, I mean, I've done that before. I've traded. It's called a seasonal trade. But again, I have a couple of indicators I use for my commodities and my currency, and I don't fight them anymore. So I found what works for me. Now, I've traded natural gas. One summer I traded natural gas. It was probably one of the best trades I had that summer. Natural gas was in the trading range. And when it hit the bottom of the trading range, I would go long. When it hit the top, I would sell it and go short. And I kept doing that over and over again for several weeks, a couple of months. It was a wonderful trade. All right, let me see now. What time is it? Okay, cool. I'm good. Here's the thing, guys. I want you to think about this. I've just asked what I think about natural gas. Do you think, and I'm not trying to put anybody on the spot here, but do you think the rest of the market's already looking at natural gas heading into the winter months? So I guess what I'm saying to you guys is sometimes, how can I put this? So, the market's not dumb. The market's kind of has a lot of common sense, and people involved in the market aren't dumb either. So what I mean by that is, most likely the market's already starting to price in the winter months coming to natural gas. They're going to look at, and by the way, they're going to look at the weather, what's going on with the weather, the forecast for the weather futures. They're going to look at that and make a determination if they think. And also a lot has to do with inventory. Now the other thing too is, I'm just sitting there thinking about this. We've had a tremendous surplus of natural gas. So I gotta do some digging here. I just got to do some digging. Right now, as I said, I went through my indicators, and natural gas is not giving me anything that looks close to a buy. In fact, my fundamental indicator for natural gas. So I'm looking at that right now. I'm just going to natural gas. Where you at? Natural gas. Yeah. Right now, my fundamental indicator on natural gas is basically neutral. It's not giving me a buy or sell signal, just nothing. I would, based on that, I would not. This is me. I would not. Let's see what else. Not trying to be funny, David. Looks like you might know more about natural gas than I do. So I'll take a look at it and give you my opinion, but looks like you know a lot. And I always tell you guys, I wish I was as smart as some of you guys think I am. And of course, there's been several people on this call that are a lot smarter than me I've had in class. I guess the thing I'm telling you is you don't have to be the smartest person in the room to actually make a lot of money in the market. So have confidence in yourself, apply common sense. And the other thing too is you guys are out there in the world working in certain industries and you see things. So, apply what you see. Always ask yourself, how can I make money off that? As news comes out, as you see things, how can I make money off that? What company can I buy? Who's going to be affected by that, both good or bad? All right, that's one of the things that we got to do. I'm going to wrap up only because I've got 5 minutes left, and I don't want to lose this recording, so I'm going to wrap up now, unless I see some other questions. I don't see any other questions here. I think I got everybody, so I'm going to wrap up. Again, I'm going to work on some more videos this weekend and post them, showing some other strategies. So make sure you guys, log into my YouTube channel, sign in, and subscribe to it, because again, I'm going to be writing. I'm telling you, I'm going to be making a lot more videos, and as I make those videos, it's going to be everything. I put the camera on my monitor. I start doing what I'm doing, and the whole time I'm doing it, I explain to you what I'm doing as I do it. So that's going to be up there, and I'll show you. Again, I'll share what I'm doing. All right, guys, take care. Have a good one. Make plenty of money, and I'm about to go check out and see what's going on with my positions in terms of earnings. All right, talk to you guys later. Thank you.